All right, everybody. Welcome to the Fundera and COVID Loan Tracker PPP Loan Forgiveness webinar. This is Justin originally from Fundera, and we have Duncan on from COVID Loan Tracker. We're going to give you, go through a presentation here and then go through a lot of Q&A we have around, focused on PPP forgiveness. At the end, we're also going to touch on, what other financing options are currently available for small businesses. But I probably, Duncan, I think, right, the bulk of the time will be spent on forgiveness, I think, correct?
Yes, we've gotten an overwhelming number of questions from everyone that showed up. So we did our best to categorize them into the best ways we could answer. But given the volume of interest in that, we're going to spend the bulk of the time there.
Certainly. And so with that, I'll just tell you a little bit about Fundera for those that don't know. Fundera is a marketplace for small business financial solutions. Essentially, with the PPP program, we've served, to match small business owners with various banks that are funding PPP loans. We also facilitate a lot of SBA 7A loans and other types of small business financing. We also have a lot of knowledge on our website, reviews of various business products and things of that nature. I've been doing these webinars almost every week for the past 8 or 9 weeks. Duncan and I have done one previously, and excited to kind of jump in here and talk about this again today.
Thanks. So yeah, we're lucky to have Justin. He's the expert. I'm just here as trying to be the voice of the COVID Loan Tracker community. Obviously, most of you know what we are because you came through us for this, but we started off as Rita and I, my wife, being frustrated, and we started the crowdsource survey, basically to find out where PPP money was flowing. Now we're moving into a new phase, obviously, that's mostly about forgiveness. We're helping people with EIDL, so we've become sort of an information resource as well as an advocate, trying to push for better adjustments to the programs for everyone. And also we have some big changes on the way that I've mentioned in the newsletter that we'll be announcing in the next couple of weeks. But right now we're here to focus on trying to get 100% of your loans forgiven.
Exactly. So let's hop into it. Just as a refresher, this is where the program sits right now. There's been over 4.6 million small businesses or self-employed individuals that have received PPP loans. However, there's still over 100 billion left in the program. The average size of, the loans have dropped more recently than, they were a little bit large in the first round we saw back in April. Since then, the average is down to, average size 110,000. The big update, which I'm sure we'll get into, was this, on June 5th, we had the PPP Flexibility Act that was passed, and there were a lot of changes that have been made to forgiveness, including some big ones. And one stat I missed on here is 66% of loans were under $50,000. So it does seem like now that we're through this program, through the lending phase of this program, mostly there's obviously a few days left to apply till June 30th, but it's starting to look like that, a lot of this money was distributed to small businesses that needed it and has had a material impact on employment over the last few months, judging by the stats that have come out recently.
The big question for everyone watching is whether there's going to be another round for people who got it first time and could do it again.
Yeah, that was the last, I have that at the end of this bullet point here, and I think maybe we talk about that at the end, but, we're with 100 billion left in this program, it definitely, I think that juice that's left there makes it a lot more likely that they could just roll that into a second program, as opposed to if that had been exhausted and then they have to ask for more money technically. So we'll see what happens there. There's already talk of it in Congress. But we're going to hop right in here and talk today mostly about forgiveness, because I think that's where, most people's heads are at. And, Duncan, please butt in if you've got questions. And, if also I start to get, into the weeds here too much. It's a topic that tends to lead itself to a lot of detail, but I think we'll save most of that hopefully for the Q&A and just try to hit the high level stuff here. So just as some background, the SBA came out with a forgiveness application back I think early June, or maybe it was even late May, and it was kind of complicated. And they essentially said, here's what this is going to be, but you're going to have to apply through your bank, so you can't go submit this to the SBA anyway. You're going to have to wait on them. And Then the PPP happened where, some key rules got changed. A new application came out on June 16th, as well as an easy version where it's the form 3508 EZ, which is meant to be for self-employed or those who didn't reduce salaries by employees more than 25%. These two forms are mostly the same. And from what I've heard from banks, there will be no real difference in the application you're going to fill out whenever you apply through them, beyond the fact that maybe you get asked a qualifying question and you get shown a few less questions later if you are, a more simple application. But, these are out there for your own knowledge to familiarize yourself with. When we send this presentation out, the links are here. It's kind of confusing. There's the form, the instructions for the form, and then there's the interim final rule, which they've issued about 10 or 12 of those on various parts of PPP. And the latest one, talks about just forgiveness alone. They issued another one the other day just talking about those with a criminal background and their eligibility. So they issue these almost every week, and this one is the forgiveness one. So it's quite a complicated process, but I wouldn't worry too much about this unless you really want to go into the weeds. So the overall, just to remind everyone kind of where we are right now, the PPP is such a compelling program, and it remains to be that way because you can turn this, a loan into a grant, which means, for a lot of people, you're going to be able to get the whole thing forgiven and won't have to pay any of this money back, which is a hugely needed inflow of capital for a lot of small businesses. The period of time was one thing that was changed recently, where before it was an 8-week period you had to spend the funds. Now that's either 8 or 24 if you took a loan before June 5th, and then only 24 if you took it after. There was also this 75-25 payroll, non-payroll expenses split. That is now 60-40. Independent contractors don't count as employees. You can refinance your EIDL loan. And you apply through your lender. So these are some high-level things. So let's jump into some mechanics. So as I mentioned before, there's this 8-week or 24-week period. As a reminder, the program when started was this 8 weeks where you had to try to fit basically 2.5 times your average monthly payroll into this 8-week period. And the feedback was, well, this isn't long enough. If my business isn't open right now or demand is down, I can't really spend all of this because maybe I don't have enough expenses to spend on rent or other costs like that. And it was all too tight. You kind of had to fit these expenses perfectly into this 8-week period. So this got changed to 24 weeks. And if you got your loan, again, before June 5th, you can choose whether to do 8 weeks or 24 weeks. Kind of the impact of the 24 weeks is that it'll be a lot easier to spend the whole thing on payroll, I think, which is kind of somewhat of the point of this and makes it a lot more flexible. Now, you can choose when to start. Yeah, go ahead.
Just one quick question. Just want to jump in here.
Yeah.
Some people, we just got a question in the chat as well, is about the 8 versus 24 weeks. Some people want the benefit of more weeks to include more payroll or whatever expenses, as you said. But given the fact that, and we should talk about this later, how long it's probably going to take to process the forgiveness, some people are saying, okay, can I just use 10 or 12 weeks and do it after that? Or is it 8 or 24? Because some people want the peace of mind of knowing it's forgiven sooner if they don't need more time. So just wondering if you had some thoughts about that.
Yeah, so that was actually clarified in the last rule the SBA put out. And basically what it is, it's like a minimum of 8, a maximum of 24, I think. Or I'm actually not quite sure. So let me take a step back. So if you got your loan again before June 5th, they issued this change so late that a lot of people had already planned for 8 weeks. So they started spending the money as if they had to do it in 8 weeks. And you can still just apply after 8 weeks and use that period of time. If if you got 7 weeks through this and you're like, what the hell am I supposed to do with 24 weeks now? You can still apply, after your 8 weeks finishes. If you say, I'm either going to elect to take 24 weeks or I'm after June 5th and I have to use 24 weeks, you are allowed to apply before 24 weeks and just be done with it. I don't know if they've established a minimum. I'm not sure if you can, apply 1 month later. I don't know how you would do that, but I think between 8 and 24 is explicitly allowed, where I think this also gets into if, when there are potential reductions around headcount, where you're trying to get back to like your previously full level of headcount and you don't want to worry about what happens later in the year. So you can apply maybe at 12 weeks, at 16 weeks, and you say, I've spent the money, I want to get this done with, I don't want to be in the backlog at the end of the year. I want this to hit my 2020 taxes, right? I want to get it done in this fiscal year. You can do that. And I think it's probably a good idea if you're in that situation where you're looking at 100% forgiveness. I would find no reason to really wait there, right? I mean, so
why wait?
Yeah, why wait? Because then you're going to be in a backlog, I think, of a lot of people who are going to probably apply in like December and January. So yeah, to that extent, I don't think it makes sense to wait.
Okay, thanks.
Yeah, so when you're trying to figure out when that period of time starts, you have two choices. One is, you start on the day you got the money in your bank account. The other one is you started on the first day of your next payroll period. The alternate period that's on this slide was more of a benefit maybe, or matter. Both these dates mattered more when it was 8 weeks because the timing was more kind of condensed. Now at 24 weeks, it's really just like a personal preference. It's not going to really impact probably the amount of costs you can fit in the period because the period is just so wide. And this, just as a quick refresher, when we say cost inside the period, this is either paid or incurred, meaning like I can incur a rent expense that pays right after my period ends and still count that as part of my forgivable expenses. All right, so this is a topic I think we covered in our last webinar, Duncan, and a critical one of PPP is what's included. What is an expense that can be forgiven? And the main portion of that is payroll costs. There's two parts to that: cash compensation and non-cash compensation. And there's some pretty specific things here, but cash comp is everything it sounds like. Here on this page we've got gross salary, gross wages, tips, commissions, bonuses, hazard pay, paid leave, severance, essentially everything that every form of cash compensation, right? The only thing there is that you're limited to the equivalent of like $100,000 run rate for an employee. So back, when this was an 8-week period, the max that you could count for any one employee was 15,385. Now at 24 weeks, that's 46,154. So that's kind of how that all works, meaning you can't count 60 grand towards one employee as part of forgiveness. There's a whole lot of stuff written in this application. I'm going to kind of skip over this about self-employed because I think we're going to get into this probably in the Q&A a bit, as there are a lot of people I think in your audience, Duncan, that are more small self-employed individuals. So maybe we come back to this one.
Yeah.
And then another part of payroll is health insurance and retirement contributions paid by employers, and then state and local taxes paid by employers like state unemployment. The other costs that can be added into the forgivable amount are non-payroll eligible costs, mortgage interest payments, rent payments, and utilities. You can also refinance your EIDL loan. I'll pause there. Duncan, you want to hop into this stuff right now on self-employed, or do you want to wait till Q&A?
Let's see. On the self-employed stuff, maybe go through it now just at a high level, and then we can go detailed in the Q&A. Yeah.
So one of the things, the week's points kind of before the latest guidance was, there are people that if you're self-employed, you're saying, I don't actually have any other expenses that I can include for forgiveness. It's just basically the pay to myself based on what I would be earning if I, was making money right now, but I'm not due to COVID and whatnot. People are like, I can't really get this fully forgiven if I'm using this concept of 8 weeks, because this 15,385 here, because if it was based on 2.5 times payroll, this is only 2 times that, right? So in the last rule, they said, okay, you can actually max expense up to 2.5 months of your 2019 comp, which maxes out at this 20,833. And so that allows essentially, like, if you were someone who, made $100,000 self-employed in 2019, and your loan ended up being 2.5 months worth of that, which is essentially this $20,833. You can now get all of that forgiven and essentially just take that 2.5 months as payroll to yourself. This cap, the $100,000, works the same way here, and there is a slight cap or kind of a bad rule here where if you earned less than $100,000 in 2019, the max you can take is 2.5 months of that number. So if you earned 80 grand in 2019, this 2833 would actually be less as your maximum.
Yep.
I'm sure we'll come back to this.
Yes.
All right. So I'm going to skip this for now, and I'm just going to go straight to these.
One question on the health insurance. Does the 100K cap include, that does not include benefits that are non-directly paid? Like you can include healthcare as an addition to the 100K, right?
You can, yeah, for like W-2 employees, it's considered separate. You do have this provision, which is verbatim from the SBA application for self-employed individuals, where it says retirement and health insurance contributions are included in their net self-employment income and therefore cannot be separately added. So this is a kind of a somewhat of a penalty on self-employed individuals, but for a normal, like, you know, if you have a business with 10 employees and they're all on W-2s, healthcare counts separately.
Okay.
Yep. So aside from, you know, if you spend, and one thing I think I missed on the slides here is that, you know, to get the whole loan forgiven, you have to spend 60% of the proceeds on this cash comp plus non-payroll or non-cash payroll, 60% of the whole volume, and then 40% maximum can be spent on these categories here. If you don't spend that much on, you know, payroll, then basically the amount you can get forgiven just ratchets down from there. Meaning, you know, if you spent less than, if you had a $100,000 loan and you only spent $50,000 on payroll, then you're not going to be able to get that $100,000 forgiven. It'll be less than that. And then, so aside from spending, you know, your whole loan on those categories with above 60% on payroll, there are a couple things that can kind of affect your forgiveness amount. One is this potential penalty based on reducing your full-time equivalent employees, which, you know, example is you had 10 employees, you know, pre-February 15th, you laid off 3 people. Over the course of your 24-week period, you average 7 employees. So you'd have 7 would be divided by 10, and you basically get 70% of your loan forgiven. There's also this second reduction based on wages, which says, you know, basically for any wage rate, which means, you know, hourly rate or salary, you know, you reduce by greater than 25%, you get penalized on a dollar basis. The whole point of these was just to say, okay, you can't cut your business down, reduce the paychecks, you know, the Paycheck Protection Program, right? And then get the whole loan forgiven. But there are some generous ways to get out of these, you know, safe harbors, as they call them, some ways to get out of these punitive rules. This one was added with the PPP Flexibility Act on June 5th. And this essentially says that if you've had a significant reduction in your business stemming from COVID requirements or guidance as a result of state and local government shutdown orders, it's not just these federal agencies, it's both direct and indirect compliance. So what this means, if you have any sort of, you know, physical location or a direct business kind of shutdown or a kind of direct impact to your business in any way from, or, you know, stay-at-home orders or anything like that, the previous slide, these will not apply to you, and you'll essentially get a get out of jail free card, which should cover a lot of businesses, not every business, but we'll cover, you know, at least everyone with a physical location and some other businesses. The second one is basically if you bring your employees back up to, this actually should say, sorry, December 31st. But if you bring your employee levels back up to where they were kind of by the time you apply for your forgiveness or by December 31st, you will also be in compliance and won't have your loan reduced. Any quick questions there, Duncan, or you can revisit later?
I think that's pretty clear. There's a number of questions about how to do payroll calculations in the specific questions, like what counts as full-time, about the half-time workers and adding up hours. about whether it has to be the same workers or just the gross number of workers, those kind of things. But I think we can hit on that in a section at the end.
Yeah, one thing that I want to make clear here, which I'm hoping I have on this slide, I think I have a little later on here. I'll talk about, there's also, nope, okay, sorry, I'm skipping around here. I'll come back to it later. There are ways to get out of that beyond just if you do try to hire, the same people back versus new people, and we can talk about that. But the forgiveness process right now is, I've talked to a few banks about this recently, and it seems like everyone's going to be launching their application process in July. Some are going to slow roll it a little bit even because they want to get it right, at least the first time. And there are a lot of questions still being asked of the SBA on clarifying certain things. But, the most important thing to remember is whatever bank gave you your loan, whatever, even if you went through Fundera, but you got a loan through, say, a company like Blue Vine or First Home Bank or Cross River Bank, you will deal with them directly for forgiveness because the lender is the one that has to process this. And there's no real, there's not a lot of space here for agents like Fundera to kind of work in this environment. So you will go directly to your bank. They will have the process for you. And basically once you submit to them, they have 60 days to get back to you. Anticipate it'll look a lot like applying for a loan in the first place. The documents will largely be the same. These are the documents kind of listed by the SBA right now. It's things like, you probably submitted the first time around tax forms, payroll provider reports, bank account statements, payment receipts, business and individual employee wage reporting. For, non-payroll expenses, this is just, rent statements, lease agreements, things of that nature, essentially trying to create a paper trail for every, expense you're going to include in PPP. So we'll see what those exact requirements end up being. When we saw during the application process, there was guidance from the SBA, and then banks asked for a lot more in certain cases. They were asking for copies of driver's licenses or other things, and so I think we'll have to see how this shakes out. But right now these are kind of the same kind of guidance that's been put out. The one difficulty here is annual tax forms for 2020. You could wait to apply right until after you do those in the new year, but if you want to do forgiveness sooner, you're going to have to do it without them, which means probably different forms of documentation. So I'll just touch on this one last thing that we go to Q&A. This is kind of what I was looking for a second ago. Is there's this concept of FTE documentation as well, which if you are raising, dropped your headcount, you're raising it back up, and you fall into maybe one of these special situations where you won't be penalized. You're going to have some way to document this. If I had 10 employees, I laid off 3, I tried to hire those 3 back, and all of them turned down my offer, and then I couldn't find another employee. You're going to have documentation of that. And I think we're still waiting to hear exactly what that's going to entail. But I think getting it in writing, for rejected offers, where showing you've made an offer to someone and they've rejected it in writing is going to be kind of the basic standard there. But there's a lot we could get into here. I can kind of steer this in a few directions during these webinars, Duncan, but I think we've got a lot of questions. So I think it makes sense to just hop right in probably.
Okay. Yeah, that sounds good. So here we go. Okay. Why don't we start with a couple perfunctory sort of cost eligibility questions. So what counts as a rent or lease payment? So I know you had a slide on that back in the beginning, but I thought we could discuss that a bit because there's a whole range of questions regarding that. Like, is a car lease payment for a business vehicle, it's real personal property, does that count? So all those kind of things. So leases and generally, and what counts as a rental, it could be, because for a lot of people that can be a big consideration, especially now that it's up to 40%.
Yeah, so here I think the SBA hasn't given like an exhaustive list. I think common sense here within the definition they've given it is what I would advise. So if you're talking about real personal property, a car lease versus rental of the physical property, a location, I think both of those would be included. You could also make an argument that a car lease would be included under the utilities transportation section potentially. Yep. I do know that for mortgages, it's explicitly on, like I said, real personal property, which, you can only expense the interest portion. You cannot prepay interest nor expense principal either. So you can't, if you have an owned building and a mortgage, you can't go prepay the next 3 months of payments or, lop off 50 grand of principal or something like that. It's just the interest due in month. For rent, yeah, it's defined as, I'd have to go back to that slide to get the exact wording, but I think it's for anything, that is real or personal property. And so if you rent anything, I think, that's whether that's a car, whether that's a space. I'm not sure about equipment or other types of things.
Basically, if the item has a physical existence, in other words,
Yes.
being real, then theoretically we're hoping that it's getting approved. And do you anticipate there's going to be any further guidance on like an exhaustive, or at least maybe a list that says what is not allowed? Because the things that are not allowed are probably smaller than the things listed allowed.
Right. I think so. This was one of the things I know that, like I said, I was on this call recently with a bunch of banks and some industry groups, and this was on the list of questions they'd submitted to the SBA about let's get a list, essentially, because there's a lot of permutations here you could do for different businesses, right? And I think, that's
infinite number of them.
Yeah. So I think, again, they'll either leave it pretty vague or they'll be more explicit. I do think that, my general take on this is with the 24 weeks, there's a lot of time to get to pay payroll, and your easiest path to forgiveness here is to use at least, use 100% of it on payroll realistically. But I think that's the easiest way. And if you're trying to really get that 40% on non-payroll, try not to bank on things around the edges and maybe just try to make it, 80% payroll or something like that. I don't know.
Exactly.
That's my general guidance. I think, if you're banking on that to get that full 40% by, where you rent your iPhone or something, and you're trying to put your Apple Care plan on here, then we might have taken it a little too far that direction, It's just my
generally try and cover everything with payroll. I think it's cleaner.
Which is why the 24 weeks can be nice, because I think for a lot of people before, maybe they would have to do a 75-25, and now you can do maybe 100% payroll, which means you only have to produce one type of documentation. I don't have to get my rent statements plus my payroll. I just do payroll.
So Justin, one question at a very high level, not so nitty gritty, is mechanically speaking, the forgiveness process. So you've made clear, and we had a bunch of people that asked that you're going to be doing this through your bank that you applied through. Now, my question to you is it actually going to be the bank's discretion what is forgiven, and then they're just going to tell the SBA this loan is forgiven, or the bank's going to be on the hook to the SBA, and the SBA is going to have ultimate say? Because I asked that because it kind of is going to decide who's the stickler, right? Because the banks are going to be really scared. They say something's forgiven, but then the SBA won't pay them. You know what I mean? So what do you think about that, or what do you know?
So the SBA, in a certain way, it's going to work very, similarly to how the application process works, as far as I know, which means that you're going to submit your application to the bank. They are going to operate within the guidelines of what the SBA has issued. The SBA has produced this application. They'll probably produce another application or another edit, more rules, that kind of thing. And at any given point, it'll be the bank's job to, work with the borrower, the business owner, to fill out that application, whether that's through a web portal where you have to go through steps, and then basically the bank fills in that information and then sends it to the SBA on the back end. But the SBA will be the one, rendering that final decision in the same way that they were approving loans the first time around. Now so
the bank basically, go ahead.
They're packaging, and they're supposed to verify what you're submitting, and they're gonna try to help you get this application packaged in a way that you'll get forgiven. But the final decision lies with the SBA in much the same way as it did before. The one wrinkle here, which I only found out about recently, is just mechanically, this is going to be kind of a mess, I would anticipate, because with getting the loans, it was the bank submitting through this online system called eTran, and then you got your loan number, and that's where you knew you got approved. The problem is, on forgiveness, there is no E-Tran. So we don't even really know how these files are all going to get submitted. It's going to be through some other sort of portal. So again, as we mentioned at the beginning
How long
of this,
is this going to take?
no idea yet. No one's. I don't think anyone's gotten forgiveness yet. So we'll see. But I think that then maybe applying early could benefit you there, so you're not stuck in a massive backlog at the end of the year.
So I could collectively feel our audience's heart just skip a beat when if they're aware of what each one was, and that there's no system designed for how this is going to be handled yet, which doesn't sound very promising.
There's like some system that already exists, but it's not meant to process this level of volume. It is not even as robust as the E-Tran system. So yeah, I don't mean to give everyone a fright here, but it's slightly concerning.
Expectations management is very good here, because they set very high expectations for the issuance of PPP, which obviously weren't met in terms of speed. So at least going into it in forgiveness, they should say, okay, this is going to take 9 months.
Yeah, so, legally you have to get a decision back within 60 days. And the good news is that this isn't going to impact borrowers really, besides for accounting and tax records, because you don't have to pay anything on the loan until the earliest is 10 months after your 24 weeks ends. So like, you have a lot of time there.
Yeah, you have a lot of time. So that's good. Okay. And so basically the banks are acting as almost like the administration, in the sense that we're going to get tons of emails that say, we need more documentation. We need more documentation. You're going to
probably
it into endless portals, and then they're going to organize it in some way, find a way to transfer that as a package to the SBA. Okay.
Yeah, this is it's gonna be the same kind of deal. If you were a big enough business where you used a payroll processor like a Gusto or an ADP, they are creating the same type of, like, they did these nice reports for payroll during the application process. They're gonna do the same thing, this time around for forgiveness, where it's gonna calculate your FTEs for you and get your payroll costs on whatever start and end date you have. I've seen Gustos; it's pretty damn good. So again, the people with payroll processors are probably going to be in better shape as they were the first, in the application process.
Yes, that definitely makes sense. Okay, another perfunctory cost question. Again, we kind of got away from the core thing there, but this is kind of related to sole props as well, which is, let's say that you're self-employed, only employee, you work from home. How do you calculate the business portion of rent and utilities from your home? Is there a set standard way to do that?
There is. It's in, when you would do this when filing filing your taxes,
the IRS.
The IRS has guidance on this, and I'm not as familiar enough with it to quote it offhand, but the way it works is essentially if you've got like a percentage of your mortgage that will count towards your home office based upon, I think they even do it on square footage or something like that. And I would say, whatever standard you've used in the past to book this, deduct this on your tax returns, that's what I would use for this. And I think the SBA actually said that's a good approach to take. And I think if I was a self-employed, business owner, and I said, okay, I've done this in the past, I did this on my 2019 taxes, then I'm going to go ahead and do the same thing for PPP. If you've never done it before and you want to do it for PPP, then I would suggest definitely digging into the IRS guidance around home offices and self-employed business expenses that are eligible for deducting on your taxes, and then apply that same guidance.
Yeah, I think that's on the Schedule C form for the 1040.
I think so. Yeah. Yep. And there's specific rules there. I just don't know them offhand.
Yeah, no, that's fine. Okay, let's go into some sole proprietor questions. Okay, so this is kind of getting into a high level question, but a specific question, which is, if you're self-employed, a lot of people, as you may know, take profits out of their business, but they don't do formal payroll, right? Yep. So now they're trying to adapt to what is the best way to pay yourself as a self-employed person to make sure that it's documented in a way that you're going to be forgiven. And basically, and what's the best way to prove that? They're kind of part and parcel of the same thing.
Yeah, I think you were the one that told me about last time around that, you could write
Or
yourself a
write
check
yourself a check.
potentially, but the cleanest way that I've heard of is, and, this ship may have sailed, unfortunately for a lot of people. It was to, if you have a personal bank account that you use for the business, or, create a separate business bank account, take the PPP in one account, transfer it to the other, maintain that record trail, and you can look at bank statements. That's kind of the easiest, or the not the easiest, but the most, I think, bulletproof way. There is the concept of writing yourself a check. There's the concept of, you keep accounting records in QuickBooks or Xero or some sort of, small business accounting software, and you want to book this as a, defined expense, and not just do this at the end of the year like some people do when they file their taxes. You're going to need to keep some sort of records as you go. But this is one that, is, I know, pretty high on the list of questions that banks have been asking the SBA about what are we supposed to do with the tens of thousands of people who fall into this situation. And so,
yeah, it's a big question.
TBD. I mean, like I said, if you did the two bank account concept at the beginning, then good for you. You're probably going to be fine, and you just will show bank statements that show those transfers, where you can say, here's what I, did this transfer each month to myself. But I think it's going to be more difficult, if you've just got that one account, and you're going to have to, maybe you just produce some sort of log, even in Microsoft Excel or Google Sheets, where it's like, this is just my record of my payroll each month or something. Not payroll, but, distributions to yourself, essentially.
So I think just this is total brainstorming for the audience. I'll tell you what I'm doing, because I'm in the same boat as a lot of you. So I have a business bank account, and I have my personal. I fortunately had been paying myself the same amount pretty much every month previous to COVID. So I was able to document that for PPP. So what I'm doing now for this period is I worked out what the cap is with the 100,000, how much can be paid, how much has to be paid each week. Then I'm doing it on a set every 2 weeks. So basically I'm paying by wire from my business bank account to my personal bank account. And then I'm keeping a log of those wires that are set on very specific days, and with a memo line that this is June 1st payroll or June 15th payroll. And then it's addressed to me. And then I have another employee, and I'm doing the same thing. And so that way, and I have a file on my computer that's organized of all the PPP documentation. So basically that's how I'm doing it from a business account to a personal account. The more complicated question, I think, is if it's commingled in your personal account. And because then how do you move money? Because it's in the same account, right? So the one hack idea I had in our last webinar with Justin was the check. Write yourself a check, because it doesn't cost anything. You can cash it, and it shows money moving. Yeah. And again,
write the memo
there. Use the memo line on the check, because most bank accounts, and you might not have paid attention to this, they keep visual like scans of the check that's being deposited, even if you do it with mobile deposit. So you can organize those in your bank account. All the big banks do this, and so you can show, okay, I wrote myself a check for $3,000 on June 15th, and it says June 15th payroll. And then at least you have a log of a money flow that can be attributed back to the PPP that came in. So again, there's a lot of questions that everyone has about documentation. And I think that's one of the great anxieties of this process, even as they're improving sort of the rules and it's becoming more clear, is the real world is so complicated, and it's a little bit hard when you're self-employed to show how everything is happening. So just trying to be creative, be safe rather than sorry, I think. But so anyway, that's just some thoughts from our side.
No, that's really great. And then I think the one last one that I thought of, I think, I at least personally have like in my personal bank account, I have a checking and a savings. I guess theoretically you could move from just checking to savings and put a memo there, maybe, if that even works, or at least have a record to show, $2,000 or whatever it is every couple of weeks. That's like a bare minimum that might work. I don't know.
Yeah, that's true. You could probably write yourself a check from if you got the PPP into your checking account, you could probably write yourself a check into your savings.
Yeah, or just transfer it electronically.
Yeah, exactly. Or transfer it electronically. I don't know if you can put a memo on those, but anyway.
I don't know.
So those are just some ideas. Yeah. Okay. Thanks for that.
I've talked to a number of people about this. I haven't heard any better suggestions than what you said. So I don't think there's not like some
not some silver bullet.
No.
Okay. Hold on, just looking at the list of questions here. Okay, yeah, a question that a lot of people have. This is not specific to sole props, but I don't want to forget it, which is the relationship between idle advances and PPP and forgiveness. There's a lot of confusion about this. I'll just set the stage and you can answer, because a lot of people applied for the idle advance immediately prior to PPP. It was supposed to be $10,000, then obviously got changed to $1,000 per employee, but it initially said it was going to be 100% forgiven. Now on the PPP forgiveness application, it says that any amount that you receive for it in advance has to be deducted from your potential forgiveness amount. So I was hoping you could just walk through that relationship.
Yeah, essentially what they did was roll the idle advance as into PPP, because like say I had $100,000 PPP loan and a $10,000 idle advance, and I get 100,000 forgiven, they will then net that 10,000 out of my forgiveness amount essentially. So you get 100,000, you don't get 110,000. Yes,
and it's just the problem. So that, if everyone heard that, that's how it works. So basically you subtract the amount that you got for idle advance from your total forgiveness amount. So as he said, 10,000 idle advance, $100,000 PPP, you got 110,000, but your maximum forgiveness amount on the PPP is 90 because you have to subtract the 10,000. And
right, so it's like a PPP advance, if anything. That's what it ended up being. They give you an advance on your PPP.
Exactly. Now the frustration for that, from my side, is, let's say if you're self-employed, you got a real small idle advance, $1,000, $2,000. Then you, instead of getting 100% forgiven, then it's going to force pretty much everyone to actually go into a repayment process instead of just having it forgiven, having documentation of that. Then there has to be money transfers, where otherwise you wouldn't have had to have so many money transfers, right? Because think about it. Okay, so let's say you got if you got a $2,000, maybe, you see what I mean?
Yeah.
Because otherwise, if you don't get your whole PPP forgiven, don't you have to pay back the amount that's not forgiven?
Yeah, so I'm not sure exactly how that's going to work. I guess they need to probably clarify that. I don't think that it will work. That you'll have to pay it back. I think they'll just say you already, it'll be all forgiven, but you won't. Well, I guess that doesn't work, because theoretically you would have received $110,000, right?
Exactly. So if you only get 90 forgiven, but you got 100 PPP, then technically you have to pay back $10,000. So then it's going to force every single person that got both, which is millions and millions of people, to have to repay some amount. It's a really odd structure. So we need to be able to get rid of that.
Yeah, I'm gonna go on a limb and say that'll get changed.
I think so too.
I hadn't thought about that. That's pretty stupid.
Yeah,
for the lack of a better
it creates
word.
an incredible amount of money transfers for no reason, and frustration, and everyone has to learn that process. So in our advocacy efforts as a COVID loan tracker and Fundera, let's try and bring that up to the powers that be, because that doesn't make any sense.
Yeah, I agree with you.
Okay. Let's talk, Justin, we haven't talked about this before, but can we talk a little bit about the unemployment assistance and its relationship to sole proprietors and PPP? Can you have both? Can you compensate yourself with PPP and unemployment assistance? There's a lot of anxiety about that. So I was hoping you could give some guidance.
The best, so this one's a little tricky, because, a few of these multiple government programs, each doesn't seem like the people designing each kind of really thought about how they would interact with each other. I think, I know it's pretty clear for W-2 employees, if you employ people on a W-2 and they're on unemployment, then you can't, they have to come off unemployment for you to employ them, and vice versa kind of thing. But for self-employed, I don't know if there's any rule, against or I haven't seen any rule, I guess. It's not that I don't know. I've not seen any mention of this where if you have a 24-week period, and you're basically paying yourself 2.5 months of 2019, that's obviously a lot longer time frame. So you could theoretically pay yourself for part of it, take unemployment maybe for a part of it, and then you would be receiving more overall money from the government. I don't think, and I'm trying to remember the exact rule, that you're allowed to, like, if you when you submit your PPP documentation for forgiveness and you showed, okay, I paid myself in, May, June, July, September, but I also received unemployment during those months. I don't think that will end up being allowed. And like I said, there hasn't been a specific rule on this, but it violates the same spirit of what they have kind of said for W-2 employees. So what you probably could do, like I said, is maybe like take a larger amount of your PPP loan, pay yourself out May, June or something like that, and then take unemployment after that, or unemployment at the beginning. Maybe you started taking that earlier and then you pay your PPP to yourself later. That's the only way I think it could work. I'm not familiar with any other specific interactions or how they've framed it.
Okay, all right, that makes sense. Thank you for covering it.
Yep.
One specific thing, this is a little bit of application confusion.
Mm-hmm.
Actually, before I go into that, could you clarify who should use, because there's obviously two forms of the application right now. Can you clarify who should use which one?
Yeah, so the guidance, the second one, or the EZ, is not that different. The guidance is if you're self-employed, use that one. A sole prop, single member LLC, that kind of thing. Schedule C filer, or if you didn't reduce your salary or wage rates by 25%. So if you didn't make any of those reductions, you can also use the EZ form. Again, I don't think no business owner is going to be filling these out and submitting them to the SBA. You're going to have to go through your bank. The bank is going to make their own form. So it's kind of the question doesn't really matter because they're going to give you an experience to go through, right, just like they did.
Because they're going to make their own
application
question platform, basically.
And it's not going to be here, fill out the application and give it back to me. It's going to be go through our portal because they're going to do validation on certain, piece of information and that kind of thing.
Okay. Yeah. Good to know. So that clarifies that point. I guess this kind of makes my next question slightly redundant, but I still want to address it just for peace of mind for people. Sure. So on line 11, can you put up you have like slide 3, you had a screenshot of the application form. Can you put that up briefly?
Yeah, one sec. Oh, I gotta share. You can see it, right?
Yeah. So we had a number of people concerned about basically the relationship between lines 8, 9, 10, and 11. And specifically, so I'm just going to point this out. This is purely a mathematical, mental error, but it's not written very clearly. So line 10 says, divide line 1 by 0.6. And line 1 is your total payroll costs. Mm-hmm. And the way that's worded, a lot of people got concerned that the maximum that would be forgiven for payroll is 60%. So the other 40% had to be non-payroll expenses. But actually, if you divide those, that actually inflates the number, right? Because you're dividing by less than 1. So right. It's not limiting it. So it's at least 60%, but you can do 100% as payroll, as we've been discussing. And I just want to point out that and again, we're not going to be filling out this actual application because we're going to be doing it through our bank, but just to clarify for peace of mind for everyone, that's not what that intended.
Correct. So what this means is like I said before, if you have a $100,000 loan and that 60% cutoff, if you spend only $50,000 on payroll, what this is saying then is if I had a $100,000 loan, I only spend 50% of it on payroll. And if I put in, 50,000 divided by 0.6, it's 83,333. All that's saying is that's the largest I could get forgiven now, meaning the other roughly 17,000 would turn into a loan. It's just like, it doesn't, there is no cliff here, which was one thing that was clarified in the Flexibility Act, was like, if you don't achieve 60% payroll, you don't get 0% forgiven. It's just the total amount eligible ratchets down at that 60% level. So then if, yes. If I only spent 40,000 of my 100,000 on payroll, then, you know, your max forgiveness is 66,000, you know, so it just keeps ratcheting down essentially.
Yeah,
That's what that line means. It's not a cliff, and, you know, so it's proportional.
Okay. Can we spend a little time going over the self-employed owner compensation calculation that they updated on June 5th? So the 2.5 over 12, because I can tell you that there was a lot of, in one way it solved a problem, which was how do I spend 10 weeks of payroll in 8 weeks on myself?
Right. That's essentially what
It basically addressed that, but a lot of people were hoping that the calculation would have just been 24 weeks worth of employer payroll. Obviously that's not what happened. So if again, just once more for anyone that came late, because we covered it kind of early, could we talk through the calculation now post Flexibility Act for the maximum amount for self-employed owner payroll?
Sure. So the concept is that to figure out, you know, what you can pay yourself, the SBA has said you can take the minimum of, you know, 2 numbers. And, you know, basically if you made less than $100,000, you know, in your self-employed income, essentially in, you know, 2019, then you take whatever that is, say it's 90,000, you know, then you divide that by 12, and then, you know, 2.5 times that would have been your loan amount, right? And that's how much you can spend for your payroll to pay to yourself. If you have $100,000 or more, then that's, you know, 2.5 months at 100,000, and that's that 20,833 number. So essentially, you know, before, where you, like you said, you would have had to try to spend, you know, 10 plus weeks of payroll in, you know, 8 weeks. How do you do that? This was specifically designed where they didn't even quote it in weeks, they quoted it in 2.5 months. So it literally aligns with probably what you would have gotten for your loan amount if you did 100% payroll, and that's what you can pay yourself. So it's a little bit more generous. I was also interested, you know, when they came out with this new rule, if they were going to do the, you know, the 24-week concept and allow you to pay yourself that much, but they didn't do that. They basically maxed it out at, you know, what you could have gotten if you did 100% payroll-based loan. So I think this is better. It definitely, you know, I think relieves some anxiety for people who are worried they couldn't pay themselves essentially what they based their loan on, you know, where they got this $20,000 loan but could only pay themselves $15,000. Didn't make much sense. So that's at least been remedied, but it's not, you know, extra generous like we thought it might be.
And just one point, speaking of self-employed people, is if you have not filed your 2019 taxes yet because of the extension, this is something to think about, because as anyone who's self-employed knows, there's quite a bit of calculation that goes into determining your reported income because of what your expenses are, because it's obviously a lot of things in your life, if you're self-employed or business. So it's important to think about whether to report more income for 2019, which allows you to get more income now than if you decrease your income for 2019, which would then obviously lower your income now, depending on where you are in that 100,000 threshold. So just an important thing, that because what you do now for the 2019 filing can then affect what's forgiven for this, which will obviously come in X number of months. So just an important thing to consider.
For sure.
What should we, hold on. I want to finish up. I know we're coming up on the hour with some employee questions. So FTE calculations and those kind of things. I know that you said that there were a number of sort of loopholes or ways to get around some of the difficult stuff, because there's a whole range of consternation depending on sector and business type about this. So if we could speak a little bit more about that.
Yeah. So the basic concept of this FTE reduction, you know, base reduction, which is what most businesses would face, as opposed to this salary or wage rate reduction, because those have to be over 25% reduction, which is more rare. The FTE reduction basically says, you know, if you are comparing the average full-time equivalent, which the SBA is defined as 40 hours a week, you know, someone is a full-time equivalent employee if they work 40 hours or more a week, and a, you know, proportional or part-time employee, not, or just less than a full-time equivalent if they work less than that. You compare the average FTEs during your 24 weeks to one of two reference periods. I think it's February 15th through June 15th, 2019 is one period you can compare to. It's a farther back in time period, like speaking for our business, we had a lower headcount then than we did just before COVID, for instance. So if you are in a position like this, you might want to look farther back. You also can compare to January and through February of 2020. And what this does is say, okay, how many employees did I have back then? How many do I have now? The calculation is a little annoying where it's this average concept. And basically, if I have, less in my covered period than I did in the reference period, my loan gets, they call it a quotient in the application. It would get, that gets applied to your total forgiveness amount. So, I like this example before, I had 10 employees. I went down to 7. That was my average during the covered period. I, then take 7 over 10, I get 0.7. And if I had a $100,000 loan, then I would apply 0.7 times 100,000, and the max I could get forgiven in that case would be 70,000. Now, there's a few things. One, there's a few things on this slide I'm showing now where if I, say I laid off 3 people, or I, furloughed them and I went to hire them back and I said, hey, 3 people, your job is back, and they said, no, thanks, don't want it. I'm actually going to stay on unemployment. Then if I have that documented, then I can, use that as kind of a get out of jail free card. What's not super clear is like, if that happens in June and I apply for forgiveness in October, you would think, if I were being the SBA at my most strict, I would say, well, did you attempt to keep hiring for that position? And I think that will be, if you try to hire and also aren't able to, that also gets you out of that penalty, essentially. If you have to fire people for cause, and you say, I had to reduce headcount because this person wasn't doing their job and I had to fire them, that's another thing that's fine. If people voluntarily resign, you're not penalized for that. And if you had maybe dipped someone in hours that took them from full-time to less than full-time and they don't want those hours back, you're also not penalized for that. That plus also these safe harbors I talked about, where this one was new, added in the last month, and basically just says, like, if you have a physical location or your business was unable to reach its full level of business activity prior to February 15th due to government restrictions, then this doesn't apply to you either. It's a safe harbor. You're good. And I think this one will end up applying to a lot of businesses. And I think there's probably some creative ways to apply it to even more businesses than just businesses with physical locations. But the one thing we don't know is, like, how does this impact if I sell to businesses with physical locations, but I work from home or something like that? That is not yet been made totally clear.
So, yeah, you can. Yes. Can you pay bonuses to people, by the way, within the payroll calculations?
You can, yeah. This was put out like, this wasn't in the original application, was put out like a month ago. Bonuses and hazard pay were both added as eligible, and the bonus doesn't necessarily have to be, earned in this time period. It just has to be paid out.
Okay. A couple more.
Yeah, I got a few minutes, Duncan. We can go a couple minutes over.
A couple more employee calculations. So one thing, I'll ask you a specific one, and then we should go into documentation. But so what's the relationship, and I don't know if this is clear, but I thought we should discuss it, between the employment time period safe harbor and the time period you choose in which to apply your forgiveness. So what I mean is, let's say you do 12 weeks and you got it in April. So you're sometime in early July, right? And if after that period, when at the conclusion of you've spent the PPP money, you're applying for forgiveness, are you then free to reduce your head count? So, or do you have to maintain that through the maximum period, which being December 31st? So I'm wondering what we think about this. There's a lot of consternation about that. especially because
Yes.
this environment is going to be so uncertain. It's in the future. So is it better to just meet your FTE threshold now, do the forgiveness application, and then everything afterward is fair game? Or is this something where you need to be worried and maintain it?
So this isn't like super explicit like in the SBA's guidance. They do talk about it a little bit, but it's not like a open and it's like
Open and
slam dunk
shut.
case. Yeah, open and shut. I'm mixing my metaphors, but so what I would say to that is when you apply and you say, okay, if I'm applying at 12 weeks and this is in September 30th, if I had 10 employees, I went down to 7, I got back up to 10, I applied at that point and I was approved, then you aren't going to be, the way I've understood it so far, based on what the most recent rule that just came out, is that you won't be then, there's no one coming back to you and saying, well, let me confirm how many employees you then had on 12/31. Like there's no mechanism for that to happen, which is why I think it's never going to happen. Like there's going to be no one checking in on your head count. It's basically when you apply and get your loan forgiven is like going to be like your last point of contact with the bank and the SBA on this if you can get 100% forgiveness, hopefully, unless they choose to audit you later.
Forgiven.
Right. Maybe you get audited later. I don't think if you have any loan under $2 million, that's probably going to happen. But like, that's why I think it's powerful potentially if you were able to get your head count back up and you're not sure what's going to happen in the rest of the year, but you're 16 weeks in, maybe you've used 100% of your funds, you're back up on full head count, apply. Do that point in time, make sure you're not penalized, and then you can operate your business a little more flexibly for the rest of the year. I think, there's the other strategy of like, maybe it's going to take me 6 months to get my head count back up. So I'm going to wait to maybe my 24 weeks runs out in October, but I won't apply till January because you have till 12/31 to get those numbers back up. So you can have your period end.
Maybe business will come back.
Yeah, and even after your covered period ends, you might hire a couple more people and then get out of it from that perspective. So you can do it either kind of like before this, the 24 weeks isn't the be all and end all date. Like you can apply earlier and have a count then, or you can apply after and have a chance to raise your head count up after the 24 weeks. So I think it's
big for business owners.
Yeah, it's going to be like when you can, it's going to be the sweet spot of like when you can, it's kind of like one of those things where you're waiting on a couple of things to hit green lights. Like, did I spend the money? Red, green. Did I get to full employment? Red, green. And when they both go green, apply kind of thing, that. So there's going to be some gaming around it there, but that's basically the way I understand it.
In my opinion, I feel like more people are going to be in a position where it's better to do it sooner. And the reason why is most people were planning for an 8-week forgiveness period until recently.
Mm-hmm.
So a lot of people have gotten their head count back up because they thought that it was going to be June 30th. So
yeah.
if you're in that position, if you take that into account where you sort of want to end that uncertainty, then, and also the fact that I have a feeling the forgiveness process is going to go smoother if you apply early than later, because there's probably going to be a lot of people that do it at once. So who knows?
Yeah,
but
maybe.
It may seem advantageous to do it at, say, 12 weeks instead of waiting the full 24 or something like that.
I agree. I think generally that'll be probably a good approach for a lot of people. I think, ideally maybe you couldn't quite fit your expenses in 8 weeks, so you can fit them in 10 or 12, right? Like you said, because you've been spending pretty aggressively. You've got your head count back up, but you're worried about maybe weakness in the rest of the year for your business. Apply, get it over with, get that loan forgiven, and then don't get penalized.
And one note, just on the whole FTE process, if people are not accepting offers, or you're communicating with potential employees, or if you have to document efforts that you, as Justin said, in certain circumstances, document it, that you're trying to hire someone. Even, did you make a job posting on a job site? Did you have to find emails, get everything in writing, not just on the phone, especially because a lot of hiring is done on the phone still.
Yeah, go out of your way to put it in writing, because that's going to be what saves you.
Yes, exactly. So in writing, create a document envelope or PDF with all the relevant information so you have it on hand in a single file. So just some last thoughts there.
Yeah, even if you've already someone declined an offer over the phone, reach back out to them and say, hey, just want to confirm that on such and such date you declined this offer of employment. I mean, that could end up saving you thousands of dollars potentially by altering the calculation at the end if you can prove that. So I'd say be aggressive in getting your documentation, even if you're like the self-employed, writing yourself a check kind of thing, do those things. Like, don't wait because it might not be perfect. I think doing things in terms of, getting your documentation right now is what's going to help everyone later, no matter what type of documentation that is.
Yep. Well, Justin, thank you. This was really thorough. I know that there are tons more questions. Rita and I will be answering them. More guidance going to come out. We might do another webinar. So thank you, everyone, for all the engagement. Thank you, Justin. And also, I know cases are blowing up all over the country, so everyone stay safe as well.
Thanks a lot, Duncan. I enjoyed it. Hopefully everyone got something out of it, and talk to you again soon.
And we will be sending her on the deck to everyone, just so everyone's aware.